How's it going, everybody? Welcome back to Is It a Buy, where we talk about stocks and try to determine if they are with the buyer may be a pass. My name is Corey. I just like to preface the video by saying I'm not a financial advisor. I'm just a guy who likes to talk about stocks, so please take what I say with a grain of salt, all right? I do have my glasses on today, looking a little bit different if you're wondering what the heck is going on with this guy. So there's that. But let's go ahead and talk about what actually matters here, the freaking stocks, all right? Let's go ahead and talk about AMC a little bit, right? AMC in the regular trading hours was down 0.67% on the day, so pretty much a flat day when it's all said and done, and it ended the day at $36.99. Currently in the after hours, down just a tad, down 0.22% at $36.91. All right, and as we can see here, we've been on a kind of a pretty much a roller coaster. Obviously, we've been on a roller coaster for a while, but more recently a little more bearish, and now we're looking like we're consolidating a little bit within this range. And granted, this is not the range that we were previously consolidating in, but I do feel like there's a lot more to come. I personally don't think AMC is a dead cat. I don't think it's over. I think it's probably going to continue to go, but of course, always make your own financial decisions. Don't let me or anybody else sway you. All right, and we can see here, we had the double bottom previously, ran up. Not sure if we'll see another double bottom over here, maybe bottoming out. We'll have to see where we actually bottom out, if we bottomed out over here and are going to hold around this $36 price target, or if we will go down and touch this $34 level of support, or even bounce down to the $31 level of support that we hit previously for that double bottom. Obviously, I'm extremely optimistic, but I do want to be very transparent that, I think that this is a possibility. Now, no one really knows which way it's going to run, what's going to happen, but which is why I'm not going to hop out of the stock, hop back in the stock. I'm just going to buy and hold and wait, right? I have all day. It costs me nothing to hold. It costs the hedge funds everything to hold. Okay, so let's go and continue over here. We're talking about GameStop really quick. GameStop was up 0.84% on the day, so pretty much a flat day as well. To end the day at $180.36. Currently in the after hours, down 0.22% at $179.97. Nothing too crazy there. Let's look at the tops for the day, see if there was anything I recognize. You guys know I love to look at the tops for the day. Nothing too crazy. What about the top losers for the one day? All right, nothing too crazy over here, nothing too crazy over here. There are a few stocks that we're taking a look at. Marin is one of the stocks that I'm just kind of been monitoring over the past since it had the run up, right? I'm very curious to know what's going to happen. This is a heavily shorted stock. I do have this level of resistance here. I think if it breaks through the level of resistance, we're going to see another freaking run. So I'm just going to keep an eye on it. I don't have a position in this, but it's always fun to take a look at. All right, so let's go and hop over to the Ortex data. As you guys know, I love looking at the Ortex data just to give me a little snapshot, a kind of a general consensus of what's going on. And realistically, I'm mostly trying to see, do I think they've covered? Have they covered? And as I look at this, the shares on loan is going back up, right? Continuing to go up at 93.72 million. Utilization is at 88.15%. So this one's going back up as well. Short interest is also heading back up at 14.77%. These numbers are extremely high, even though they're down from where they were. They're down for no reason, I might add, in my opinion. Let me clear out some of these. We can see here the short interest basically is a pretty good indication of where the shares on loan and utilization. They all kind of are in a similar pattern. So I'm just going to use the short interest here. And, the short interest, it was on its way up, right? We had this huge run. It kind of went down a little bit, which makes sense. It looks like they may have covered just a few shares. And whenever they cover just a few shares, the price skyrocketed and the short interest went down just a tad, right? No big deal. And previously, it's been just continuing to go up. And it had a strange jump from like 13 to 18. And that jump lasted for a little bit, and then it kind of recalibrated, if you will, back down to a little more reasonable levels of where it would have increased, considering there was no kind of price action. So again, I'm really not too worried about these numbers at all. All I care to see is I don't believe they've covered, and I believe that this thing has so much more to go, and it makes it so easy to hold whenever you understand kind of the gist of what's going on Makes it so freaking easy for me to hold. And yeah, it doesn't feel so good whenever we're at, below $40. But you know what? I held at $5. I held at $25. I've held everywhere in between, and I held at $70, and I've held everything. And until I feel like this is a dead cat or ending, I'm personally, my personal strategy is to continue to hold. But of course, like I always say, just have your own strategy for yourself. All right, let's go and take a look at the subreddit. All right, AMC stock subreddit, and see what is going on over here. We can see here the dark pools, and the dark pools is something that we've been talking about. It is very interesting. I think right now that seems to be everybody's biggest conversation, right? It seems that we've kind of narrowed it down to payment for order flow, dark pools, how they route the orders, and that it just allows them to manipulate the stock, or at least people can buy the stock and the stock doesn't move, right? It's very, very strange the way these payment for order flows and everything, and the apes the way we seem to understand it. And, it just doesn't seem right. It doesn't seem right. If you look at dark pools, inherently, by definition, it's just the sketchiest thing you've ever heard of. Retail investors can't use it. It's only for institutions who want to stay anonymous. It's the sketchiest thing ever. So we can see here, it says they had to use dark pools in 71% of AMC volume. Think about that, right? And so imagine if the dark pools, it looks like this is something that people are trying to get either suspended, bring to light, and the apes do a fantastic job with naked shorts bringing it to light. We saw previously, now dark pools. And on Fox News, they talked about it today, about dark pools. And again, bringing it to light is the most important thing, and seeing what we can do. Dark pools, I'm not familiar with this particular chart. Actually, I've seen it over here, and we can see the percentages. Okay, I'm not familiar with this particular platform, so I'm going to go ahead and leave it as is. We'll take this person's kind of word for it right here. But I do personally believe, and it looks like it based on the information, that dark pools are being traded, and it really is not good for the apes at all. And if we can suspend the dark pools, I feel like the stock will freaking run, right? And there's a lot of NSCC, DTCC rules filings that are continuing to be filed and passed. And I think that hopefully eventually we'll get over to the dark pools, because I don't think that should be a tool that hedge funds and institutions should be able to use. It just doesn't. Maybe I lack the understanding of why they should be able to use it, but it doesn't seem like something they should be able to use at all. Okay, quick thing to talk about is, you guys know I'm very passionate about getting out of specifically Robinhood, right? Because Robinhood, we know all of their conflict of interest. We know what they did with the squeeze in January, that gamma squeeze, and how they halted trading. We know all of this, right? And now there's also payment for order flow concerns with brokerages, right? And this particular post is talking about Webull, about getting out of Webull because of the payment for order flow. You should be able to disable payment for order flow or route it through the New York Stock Exchange, or at least you can do that in Fidelity, in order to bypass the dark pool, so they can't use your shares for dark pools. But no matter which brokerage you're in, I think it would behoove you if you are in a squeeze, if you're hoping for a squeeze, to see if you can stop share lending, because it seems like what's happening is these hedge funds or institutions are taking your shares of AMC, they're lending it to hedge funds to short AMC, and they're shorting it with your shares that you're long on, okay, which is no bueno for you. And if you don't like that, I highly probably recommend Googling how to stop lend sharing in your brokerage, and make sure you do that. I'd probably recommend it. All right, so I'll go ahead and leave that there. So next Friday, so we don't do dates on this channel. We don't do dates. The apes are very good about not doing dates. Oh, boom, right here. Be careful with dates, okay? But we'll just see what's going on here. This is something interesting, and we'll see if it actually comes to fruition or if it's just something else, okay? Next Friday, July 30th at 4:15 p.m., the Federal Reserve will be publicly releasing the total derivative exposure numbers of all the biggest domestic and foreign banks and their lending clients, including Citadel. MOAS guarantee, which again, no dates, no promises, because then you'd hate for somebody to be disappointed. Start here. It kind of goes into all of this stuff. It's pretty interesting, but again, I just want to be careful with people getting too excited over something like this. Okay. And going all in on options or whatever it may be. So I would just be extremely careful with this kind of stuff. But if it is something you want to look into, then by all means, you can find this post here and hop in. Okay. And the final post I kind of want to talk about is be prepared for the MOAS to be the LOAS. Okay. Longest of all short squeezes. Okay. And, again, this is more of a fluff post or whatever, as we can see by the title right here. And, realistically, I think it's possible this takes a while, right? Unless they get margin called. I personally feel if they get margin called, then all bets are off, right? It's going to be run. It's going to be very fast, relatively fast. I think it'll still take a while, at the very, very least multiple days, personally. But if we end up in this kind of cycle that we're currently in, where slowly it pushes, we could have something like a Tesla situation where, as we know, Tesla ran up over the course of a year or 6 months, 8 months, whatever it was, and just took a long time, right? But within that time, it went from like $2 to like $1,000, or no, $200 to $1,000, or somewhere around there. But either way, I personally think that AMC will go much higher. But if we get in that kind of situation, I would not be surprised. Let's say we're at $500 or something. I wouldn't be surprised if all of a sudden like margin calls kicked in, if we had a huge day or something, and then it just starts running. And that's when we can see like over $1,000, $10,000, and who knows where it's going to run. I really can't tell you where it's going to run because no one knows. But I think those are the kind of situations where you see these crazy astronomical numbers. And, I'm sure people get tired of holding or it sucks or whatever. But you know what? If you've been holding since before June, then you're very much up and you've already gotten over 100% returns, right? So I would imagine that people are probably pretty okay with holding this kind of stock with those kinds of gains. And I always say it, but talk to your other retail investor friends, right? Ask them how well they've done over the past year. What is their increase? I guarantee that most of them will be under 100% return. And if you ask them how they've done over the past 5 years on their return per year, I guarantee it's going to be much less than you think, right? Much less than you're going to see potentially in AMC. And so I'll just leave it there. And that's what makes it so easy for me to hold. I know getting over 100% a year is pretty difficult, relatively difficult. And yeah, so most people are pretty happy with 25% return a year in the S&P 500. That's a good year. Anyway, so I just wanted to give you guys that information really quick. Realistically, today traded, pretty sideways, which is why I'm not really doing the live stream today. But I feel like, we can still get a good amount of information and still get a fix of the stock and what's going on, right? But that's what I have for you guys. Thank you so much for taking the time to watch the video. If you do like the content, please consider subscribing if you're not already. And if you want people to know what's going on, drop a like or do whatever you want. All right. You guys have a fantastic weekend. I look forward to seeing you guys on Monday. Peace.